In today's video, we're going to discuss the most forgotten Yieldmax ETF of them all, OARK, which tracks ARK funds, ARKK, and I'm going to share with you how I'm playing this fund to increase my performance and dividends even more from this point. So we earn over $400,000 per year in dividends from Yieldmax, as you can see below, and we're outperforming all of the indexes with Yieldmax and some margin. We're up 44% for the year. The S&P is up 25, the Nasdaq's up 26, the Dow's up 17, and the Russell's up 18. So we're beating all of the indexes on a year-to-date basis, and on a daily basis, we're up 11,000 today, or 0.66, which, as you can see above, also beats the indexes. Even with Bitcoin down today, down significantly today, we still outperformed all of the indexes thanks to OARK in part, ARKK, and some other funds, and we'll get into that right now. Yieldmax and some modest margin usage helps me live financially free from 9 to 5. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. Our margin debt is now at $600,000, as you can see below, $618,000, but my dividends of over $400,000 per year will pay this back in around 1 year, so my leverage is not a risk to me, as my leverage will go away monthly. My margin interest is below 6% now because I've negotiated my rates down twice. Many of my clients who bought my e-guides did the same thing, because when you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, so I'll text you that script whenever you need it. You can also call me whenever you have questions about your portfolio, and I'm here to answer those. Even if my margin rates weren't low, the yields that we earn from OARK and Cornerstone, etc., are still high enough to beat my margin interest rate. So we have an instant arbitrage profit when we use our margin debt. So why not use this margin when you're tied to dividends and the indexes? But today we're going to be discussing OARK and how I'm getting more performance out of my account with OARK and ARKK. It's one of the most maligned Yieldmax stocks out there. I remember when Yieldmax was just getting started, everyone wanted to bash OARK, saying that its chart doesn't look good, it erodes, as you can see here, but that's just because ARKK was down and Tesla was down for so long. Now that Tesla's starting to move higher, ARKK is starting to move higher. Plus, ARKK has Coinbase, other forms of Bitcoin exposure. It has Tesla. Look at its top 10 holdings. Tesla is 15% roughly, and you have Coinbase, which is 7%. It also has all the other meme stocks, Palantir, Square, which has been doing great, okay, Block. Robinhood's up 40% for us. We own the stock Robinhood, and that's been doing great for us. So I could potentially consolidate some of my meme stock gains and just buy more OARK, because OARK has all those top meme names that you need. The question then becomes, should we use OARK for our small cap exposure or the Russell 2000? Well, the Russell 2000 is one of my favorite plays. I've been buying RDTE, as you all know, but RDTE has more names in it because it is the index, the Russell 2000, which is nice because it gives us diversification and safety from unwanted volatility within the Russell 2000. However, ARKK is more concentrated into the top mega growth themes, and the Russell 2000 has a lot of other sectors in it, all the 10 sectors that aren't necessarily tied to mega growth themes. So I like using ARK as my synthetic Russell 2000 exposure. And why play ARKK when you can just go with OARK? Because OARK actually pays you a dividend. It shows a 40% dividend right here. And when ARKK was doing largely nothing for about a year or two, OARK was still paying you steady dividends, qualifying you for loans to banks, because you need dividends to qualify to banks for loans. They don't accept trading gains. You can only use dividends or your pay stub. So that's why I don't really like IWM, because IWM doesn't give you a dividend, so it doesn't give you the qualifying income. And again, it's not concentrated into the mega growth themes like ARKK is. So I'm also going to be buying ARKK. I'm going to share with you how I'm playing ARKK. I'm not just buying OARK. I want OARK for its dividends and some days gains potential, but I also want ARKK because it's low maintenance. As you can see here, ARKK is lower maintenance than OARK. It's 30% maintenance, 35% maintenance, I'm sorry. And it gives you some more upside potential. If you need help understanding maintenance, that's in my Volume 3 e-guide. Maintenance is the whole secret to my success, okay? For every $1 you put in your account, you get $4 of purchasing power. I'm just using a small amount of my margin, as my members know, to get ahead. All of the greats that I know of use debt to get ahead. Elon Musk used his margin debt to buy Twitter in part. So this is how I'm getting ahead. And I like margin debt because it doesn't show up on a credit check to banks. So this is how I'm really living free from 9 to 5. And OARK helps me accomplish that, especially OARK on margin, because the margin debt that I'm using is actually increasing my performance with OARK, and it's making me cash flow my investment faster, because once my margin debt is paid back by my dividends, then I'm left with all these assets to myself paying monthly cash flow for life, including OARK, and then my break even is accelerated because of this margin debt. You just want to make sure that you, again, play by the rules when you're using margin. I always say that you have to have low maintenance names, which I alluded to, and you have to keep your put options on. I always buy put options to hedge my portfolio in the event of a crash. If you need help buying put options to hedge your portfolio, that's in my Volume 5 e-guide. And also I sell options. I sell options on Yieldmax, even on ARKK, and that's how I lower my margin and lower my risk while still going long on my securities. If you need help selling options like I do, that's in my Volume 6 e-guide. All right, now what about TNA? Why not just buy some TNA, which is the triple leverage Russell 2000? Well, TNA is 75% maintenance, so it sucks up most of my equity and it decays on a chart. So if it's not paying you much of a dividend and it decays on a long-term chart with 75% maintenance, I'd rather put a bulk of my money into RDTE because it is the index, it is the Russell 2000, but it gives me a nice dividend with 50% maintenance. All right, so RDTE is how I play the Russell with 50% maintenance, and I get more compounding ability behind RDTE because I put so much money in it. I can't put as much money into ARKK because it's not as diversified as RDTE, but that's how we've been outperforming the indexes, especially with the Russell 2000 lately. We've been going big into the Russell, and RDTE has been a big component of this strategy because RDTE and IWMY again give me the compounding power that I need to take advantage of this up move that we're seeing in the Russell 2000. So RDTE is important, IWMY is important, and I like them better than TNA because they have lower maintenance. And then I have OARK for my specialized hyper growth meme plays that everyone's chasing right now. And yet ARKK is more stable than, let's say, an Ulti because its largest holding again is Tesla, which is in the S&P 500. So it's anchored by quality stocks. Palantir is in the S&P 500 as well, if you saw my past video on Palantir. So I like ARKK, I like the nature of it, but I can't put too much in it because again, it's not totally diversified like the Russell 2000 is. And then I can sell put options on ARKK to get even more performance going forward, lower my margin like you've seen me do in the past. So that's how I get the most performance with OARK. I combine it with ARKK. I buy ARKK outright and I sell put options on ARKK when it falls because that's when premiums are more attractive. All right, so even with Bitcoin down today, down huge. If you saw BitX, for example, that's one of the Bitcoin plays that we have. BitX was down almost 10% today, all right, 9.11. But if you go to ARKK, once again, it was up 1.5% today, matching the Russell somewhat, and it has Coinbase and some other blockchain exposure like SQI, for example, but it didn't fall with Bitcoin today. So it gives you nice diversification from Bitcoin, but yet it moves with Bitcoin somewhat because it has Bitcoin in it and a lot of the meme plays within it. That gives us upside potential, almost like a lottery ticket. All right, so you want to stick with ARKK if you don't want to miss out on the meme craze. And ARKK is the safest way to play the meme craze, in my opinion. And ARKK is not back at its old highs. The Russell is almost back at its old highs. ARKK is still somewhat cheap, so I'm liking ARKK right here. It's also a way to play Tesla and Coinbase once again. And so I'm buying ARKK with its low maintenance. I'm selling options on ARKK, and then I'm buying OARK heavily because I know that my dividends are going to cash flow my losses over time. So on any further dips, I'm going to be buying more OARK and I'm going to be selling puts on ARKK. All right, one more thing before we go. Cornerstone was up 1.5% today, whereas the NASDAQ was only up 0.27 and the S&P was up 0.3. So this is how we got our day's gains. It was because of OARK, ARKK, and Cornerstone. And if you don't know about Cornerstone, Cornerstone is a 4-star fund and it is the index. That's why I put all of my money behind Cornerstone, because I can get my compounding power and sleep well at night without worrying about some kind of major market fall because the indexes fall less than stocks. If you go to a chart of Cornerstone on E-Trade, you'll see that on a 1-year chart, yes, it's moving upward, left to right. It's blowing away the indexes. But on a 10-year chart, see here it is, it's blowing away the indexes. But on a 10-year chart, it moves sideways to down. That's because you have to play it properly around its rights offerings. Remember, closed-end funds like Cornerstone have rights offerings. And if you need help playing Cornerstone, that's in my Volume 4 e-guide. And when you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. We have over 1,000 members here in the Discord chat and pursuing the fire lifestyle. So whatever questions I can't answer about your brokerage account, someone here in this Discord chat room most most likely can. We have a Yieldmax channel, Roundhill, Defiance, you name it, but the most important feature of this chat room is the Cornerstone rights offering announcement, because that's how we really level up our account. That's how I got my account from being at about 15,000 during Corona to over 100,000 during 2021. It was because of Cornerstone and my margin usage. And of course, I got a loan from the SBA because of my qualifying income from dividends. That's how I also leveled up my account. All right, so we're outperforming all of the indexes. We're up 44% for the year. After today's gains of being up 11,000, we're going to be up over 45% tomorrow. These Yieldmax funds plus Cornerstone and some margin are helping us live the FIRE lifestyle, which means financially independent, retire early. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, so keep that in mind. All right, if you like the video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.